Today is a glorious day because today is the last day of this holiday BS nonsense that we are facing. Or rather, I should say, we do have one more day before pretty much everyone is back on track and this market is going to be showing some weakness, some panic, maybe some strength. Who really knows? But today is the last day of 2025, so happy early 2026. Tomorrow, the market's going to be closed, so we'll not be recording a new video, but I'll be right back at here on January 2nd, Friday. January 5th, Monday of next week, I'm going to be revealing my public profile challenge, aka my bung profile. Pretty much talking what I plan on doing with this for documenting on YouTube, why I'm doing it, pretty much my strategy behind it. Basically taking a good chunk of moolah here. Very, very good, decent stocks here. You can definitely say all these stocks are very risk on, although I will argue each and every single one of them. But strategy is to grow this to six figures, whether it is between 12 or 18 months. Going to be posting a lot of videos here on YouTube. So if you enjoy this content, smash the like button and subscribe for more, because next year, oh man, it's going to be interesting. We have a lot of stuff to talk about in this video. So here we go. Okay, so straight off the bat, going on yesterday, posted a new video midday yesterday, just continuing a slow bleed around this really holiday algo driven like season. Unfortunately, we did not get a Santa Christmas rally like a lot of people wanted. To be honest, I actually really wanted Santa Claus to give us a fat piece of coal, and it kind of really looks like we got that overall with this slow bleed in a way. But at the same time, it wasn't a full-blown style 2018 epic drawdown, or rather I should say crash. 2018 was a crash, although we did experience a lot of a pullback here. The real question is, are we going to be getting another pullback on the major indexes, which is going to cause these stocks here to go down another maybe 15, 20, maybe even 30% for some of them, which is a little shocking to really think about. But unlike 2022, we have the Federal Reserve that's going to be very driven by cutting interest rates, especially a swap on the Fed coming this year. So all the people that are saying this is a 2022 scenario, it's really the opposite. This market right now just has a lot of fear in it. There's a lot of pussyitis going on. And 2022, you had growth rates slowing down. The companies on the screen right here are showing the opposite. They're showing a growth rate acceleration. The Federal Reserve is not looking to hike rates. Now, there are some things I do want to talk about before getting into some price predictions of where I see things kind of really moving here. Firstly, yesterday, the Federal Reserve minutes came out, and they were no different than the minutes that we got several weeks ago, actually close to about well over a month and a half ago. Right now, the betting markets is at a very low chance. So there is a 14.29% chance that we will not be getting a rate, or that we will be getting a rate cut in January, at the end of January, January 20. It's actually after SoFi's earnings. January 28th, the Federal Reserve is going to convene, so we have a lot of time. A lot of people are saying there's not a chance in hell, but then again, a lot of people said there's not a chance in hell we are going to be getting a December rate cut. If I got to go ahead and like, you want me to force myself to making like an opinion, there is actually a high probability that we could be seeing another rate cut in January. But Powell could then say, yeah, we're done cutting rates until I leave in May. Then the Trump administration could come out and say, "Hey, we're gonna pick this person, and this person is gonna outline even more aggressive rate cuts. Instead of cutting rate cuts by a quarter point, we're gonna be cutting rate cuts by a half a percent, so 0.5, maybe even greater. Maybe the new Fed chairman, whoever that is, says, hey, as soon as I get in, I'm going to cut interest rates by a full 1 basis point. That's going to be massive. So there's a lot, and we already know that it's going to be swayed by politics. Everything's swayed by politics. If you don't believe that stuff is swayed by politics, you got to go ahead and expand your mind. It's just whoever Donald Trump, President Trump's going to pick, is going to be for lowering interest rates. There is no ifs, ands, or buts about that. It's kind of ironic because I'm almost positive that Jerome Powell, when did Jerome Powell become Fed chair? Pretty sure Donald Trump. Yeah, so actually, it's kind of really ironic. Donald Trump actually, so Jerome Powell became Fed chair February 5th, 2018. He was listening to Donald Trump during COVID, but then during COVID, we fell off a cliff. That's why interest rates plummeted. Obviously, during the rate hikes, Donald Trump was not. But the point that I'm making is that we could see a Fed chair very straight off the bat before interest rate cuts with midterms coming up. And then maybe in 2027, we could really see not a whole lot of rate cuts. But if I'm willing to really place a wager, we're more than likely going to see rate cuts in a lot of the second half of 2026. Maybe we just get a January rate cut and then that's it. But we are at the same place on the betting markets as we were back before, or rather at the beginning of December. Beginning of December, we really were not expecting a rate cut, and then a rate cut happened. Ironically, the market really didn't rally because Jerome Powell came out and said, hey, don't trust the data. It's because of the government shutdown. So the market really just didn't know which way to go, if anything. So we really got to cover this intensively. If you really want, like, my opinion and what I'm doing and I'm prepared for, I've been making videos all week and also last week talking about this. I'm just literally taking a back seat. If the market goes up, it goes up. If the market goes down, I got cash and I'm nibbling on into stock positions. I'm not going to FOMO on in if the market goes up because we're already near all-time highs here. Can we bust through all-time highs? And if we do bust through all-time highs, I have great positions here. So, yeah, and these positions were bought over a month ago now during the massive dip that was happening. 2-3 months ago, I was very underinvested in this market. Was holding a lot of capital. I pretty much went all in during Liberation Day low, and I ended up trading. I ended up selling a lot of stock because I was up by over 100% on a lot of my positions. I was buying Palantir in the 80s, high 70s, and then I ended up selling in the high 50s, right below 1. But I sold a little bit too early. Was selling. Started selling at the end of June and also July. Probably should have waited until maybe August, September. But hey, profits are profits. Now I'm pretty much getting back in and doing it all over again. You buy the fear. That's how you make money. You buy the dip, you sell the rip. If you are a long-term investor, I'm a long-term SoFi investor, also AMD investor, then you just buy the dip and you look at the future value. Okay, so we talked about rate cuts so far, data. Now I just want to do some fun price projections please take this with a grain of salt. I am. So I ended up asking Google Gemini, based on current growth rates, what could the stock price be for 2026? December, the end of 2026. So I actually have a real life friend. I'm also a gamer, so some of my verbiage may be skewed here. But I have a friend that I know in person, not from the, or it's actually no in person, not on the internet rather. And my friend watches all these videos. His viewpoints are completely the opposite. He is very much into ETFs and also safe stocks, dividend stocks, and he considers all these positions to be very risk-on and also a little bit like nerve-wracking. You do you. I'll do me. I sleep just fine at night. I honestly don't get that much sleep. I get 5-6 hours of sleep because that's all my body needs. But I do not wake up during the night. I sleep for a solid 5-6 hours, and I wake up fully energetic here. So, if these companies just continue to do what they are currently doing, I am going to make a lot of money on this profile throughout 2026. I mean, this, based on current growth rates for Palantir, it's a lot of this is really laughable, but this is just based on current growth rates. Obviously, next year with interest rate cuts, hopefully with a more inflationary environment, with the Federal Reserve increasing the money supply, a potential tariff dividend also, and just the overall economy really growing, if everything aligns with what the Trump administration is doing, which is taking in more money with investments, we could be in the roaring 90s, honestly, the early roaring 90s. And we could have another year, which is going to be number 4 consecutive years of double-digit growth in the market. It's not unheard of. It did it throughout the 90s. A lot of people are saying the opposite. A lot of people are saying we're gonna go negative next year because we've had 3 years of consecutive double-digit growth. It's, people. I have no divine powers. I'm not God here. Neither are you all. Neither are Wall Streeters. Neither are anyone. We're just looking at data and basically making a assumption. But with the current growth rates, if these companies just literally do what they're doing, you're talking Palantir 254. Okay, so Palantir 254, my average on Palantir here is 158. I make money. You're talking Meta. Now, this is actually a pretty close one, because with Meta, I've talked about Meta a lot on this channel, and the thing about Meta is that this is not taking into consideration midterms, the amount of money that's going to be pumped in for Meta. This could really be closer. Actually, let me go through these, and then I'll go ahead and give you my own personal opinion. But okay, $800 on Meta. I have $599 rounded up to $600 average. I make money. What else do we got? Adobe 441, new shareholder of Adobe. Love Adobe. Use their products all the time. 318 average. AMD, biggest cost basis position on this account, 210. I got to talk about AMD a little more. SoFi 39 closing on the year. Gemini's, really kicking SoFi in the nuts here a little bit, but still massive growth rate, 45%. Obviously average of 1345 on here. My private profile, my average is $7.41. It's a big position. So yeah, definitely we got to talk about that here. Robinhood, got to talk about this one as well too. Robinhood average, first time shareholder 109. PayPal, 15%. You want to know what? Maybe that's actually going to be the case with PayPal. $68. Obviously, new second time of owning PayPal here. 61 average. And then we got Honest, which is a shocker. Honest is my risk-on asset here, in my opinion. They're going through a transformation on their balance sheet. 380. Honest, I got 2 points. So that could be some good. Okay. So do I agree with these? I definitely don't. Palantir has shocked the world. I've been in and out of Palantir. This is my 5th time being in Palantir. I was buying Palantir in the teens, the 14, 15, 16s, sold in the high 20s, got back in the 30s, sold in the 60s, got back in. So I've been trading Palantir. I honestly fucked up with that one. And you want to know what? I'm not making the same mistake with SoFi and AMD. I should have just held Palantir, and oh boy, instead of making tens of thousands of dollars on Palantir, I think the total amount of money that I've made on Palantir, probably not more than 30,000, but definitely more than 20. Anywhere between 20 and 30 grand. If I had held Palantir with an average of the teens, life-changing money, well over 6 figures, would be my biggest position right now. So it goes to show you, the management team can surprise you like no other. So if Palantir continues to put up crazy growth rates, it could very well be in the 300s. But it's all up to the management team. It really truly is. Meta, I really see this between 8 to 1,000, and the reason being is because people are not taking into consideration midterms. Where are people going to be advertising? Politicians. Facebook. Okay? They're going to be using Meta products. Give a lot of money is going to be funneled on in. Adobe. We just had record-breaking sales of AI for Black Friday and Cyber Monday. Next year is going to be another record-breaking in my opinion. AMD, second half of the year with the open, if OpenAI comes through. So Nvidia is giving OpenAI a lot of money as from an investment standpoint. OpenAI is then taking that money and buying AMD chips. It's a slap in Jensen's face from Nvidia. It's pretty funny. If everything goes the way that Lisa Su is saying about 35% growth rates, she does come in lower, so she'll put out a number and then she'll beat it. We could see even higher growth rates on AMD, especially with FOMO and their new chips that are it's going to be a big AMD, in my opinion, is going to have a massive first half of the year from FOMO, or it's going to have a massive second half of the year. So if AMD does amazing the first half of the year, it could lag and be very stagnated the second half of the year. But I mean, if everything goes the way, and if they're funneling more money into the company, I'm actually currently in a MBA program, doing my master's, marketing, bachelor's into MBA. It's pretty fun. One of my finance classes that I just got done doing a semester with, I actually did AMD as a company, and I just listening to conference calls, listening to Lisa Su, I am honestly a little bit more excited for AMD than I am for SoFi, to be honest. So, and the reason being is because AMD, SoFi, we know that SoFi is going to be a banking giant, but we don't know what AMD can really turn into. Can AMD turn into a multi-trillion-dollar company like Nvidia did? Can AMD do something completely, like obscure and just pull maybe a 5, maybe 8, 10x in the next couple years? Or could AMD just maybe do a double up and that's all it's going to do? Who knows? At the end of the day, I'm still going to make money. So I'm happy with this. SoFi, I believe in the management team. Imagine if you are Anthony Noto and you have to get your stock to $45 by June to get $120 million. I want you to go ahead and say that out loud. I am a CEO of a company. All I have to do is get my stock price to $45 by June, and I believe he has to hold it for like 3 months. So I just got to continue doing what I'm doing. The stock price is going to go to that area. I got the Federal Reserve lowering interest rates. I am triple beating. Come on. That's laughable. So it makes me very happy to have a very large amount of money invested into SoFi because the odds are in our favor. Could things go south? Oh yeah, absolutely. How quick could they go south? Snap of the fingers. What would I do? Probably buy some more shares. Be patient. If Anthony Noto doesn't get his stock package, hey, you want to know what? Shit happens, but the company is still growing. And they have stated that their big years are going to be 26 and 27. I'm happy. What else do we have? Robinhood. So Robinhood is going to flourish in a bullish environment. As long as we are in a bullish environment, Robinhood's going to do good. Do I agree with this $147? I believe that they're going to continue to beat and raise. Maybe they're going to have some rough quarters that they don't see as big of a numbers. But overall, I mean, I feel pretty secure here. If I were to start chiseling off some profits and start realigning some cash, I think Hood might be the first one that I may do, but we really got to see. PayPal is a hated stock, and I love it. I ended up trading PayPal during late 2024, made some money, nothing too crazy, couple thousand. But my average on PayPal back then was much higher than it is right now, and it's where I'm at right now. I feel very comfortable. If we enter a very monetary easing environment where the Federal Reserve is printing more money, PayPal should and PayPal is growing. People don't understand that. Not only is PayPal issuing dividends, they are also growing. Honest Company, this one is really kind of a risk-on play for me. If for whatever reason, if this stock goes up very quickly, I'm going to start taking profits and I'm going to be chiseling out. I'm not looking to be a long-term investor in Honest. Honest is really probably a short-term trade for me. Probably anywhere between maybe 6 to 12 months. And in my opinion, once they get done doing their transformation on their balance sheet, we should be seeing a lot of clear stuff. It's basically pretty much you have a product that is not selling well, so they're getting rid of the products that are not selling well, and then they're aligning themselves to products that are selling well. It freaks out shareholders. I mean, hey, it is what it is, but that's how the game is played. Okay, so at the end of the day, if everything goes the way that I see it, I mean, this profile, just with these positions, you're talking money. And this is where a lot of people get caught up in the FOMO. This is where a lot of people get caught up in drama. The stock market is here for one reason, and that is to make us money and better our lives. So therefore, having a game plan, ignoring the noise is the best way to go about things. I'm a profitable trader investor. I did have 1 year in the red, which was 23, got my bum kicked. But otherwise, 2020, 21, 22, 24, and closing on another profitable year here. Very happy, very extremely grateful to God. And yeah, we're gonna be oh boy, we're gonna be having some fun next year. So if you enjoyed this content, definitely smash the like button. Like I said, subscribe for future content. And I'll see you all on Friday. And take it easy, be safe, happy New Year, and later.